So far this morning, we've had a tale of two markets. We've had an early crowd, the early risers, apparently the ones who didn't have any fun over the weekend. They came in. Market was down heavily. We're down over 500 on the Dow, and the bond yields were up like 7 basis points at one point. And then I guess maybe the crowd that had more fun over the weekend and took them a little longer to wake up this morning. They came into the market and they started buying up all the bargains. And so the market has responded back the other direction, although still not in the green by any stretch of the imagination, but certainly happier than it was a little while ago. And so far, the news coming in this morning, the economic news coming in, we'll talk about that later. That information seems to be pretty good. So we'll see how the market goes overall. I suspect the biggest thing weighing on the market this morning is probably the tariffs. But here's an interesting thing that's going on that I haven't really said much about. Western Europe is in decline. Everybody's talking about France and England and Germany, all the countries that are not doing very well right now. But you know what? The countries that are doing well, countries that haven't been very interesting in the past, recently at least, Turkey, Poland, Portugal. These are countries that are in the news in a positive way. And this morning, Turkey's in the news on a positive way with regard to Tesla. Turkey reported 8,730 Tesla shares, 10.6 market share in August, 8,700 cars. The BEV penetration is 21% in Turkey, and Tesla has half of that segment. Market share is 550 basis points. Tesla's the second best-selling brand. The Model Y is the best-selling car. 100%. The Model Y is doing great. Best month ever with 21% increase versus the second best month. This is all from, by the way, I should give credit here. This is from Pilolly, Pilolly, if you want to follow him. Anyway, last 3 months up 1,000% versus March through May of this year. Year to date, up 466% over the same period. So this is Turkey, not a country we normally pay very much attention to, right? But we've got this shift taking place in Europe where the old countries like Poland, Czechoslovakia, etc., are doing way better than the Western democracies. I don't know what could be going wrong with those other democracies. Do you? Let me know in the comments below. Anyway, Reuters says Tesla's China-made electric vehicle sales dropped 4% in August from a year earlier, following an 8.4% fall in July as the U.S. automaker refreshed its aging lineup in China's hyper-competitive market. However, oh yeah, rotation. However, deliveries of Model 3 and Model Y vehicles made in the Tesla Shanghai factory, including exports to Europe and other markets, surged 22.5%. I'm sorry, that's 22.6%. Let's not leave any of that out. From July to 83,192 units last month. Now we're talking. That is a regular cool number. That would be 1 million units a year coming out of China if we keep that up. That is really good news and should be keeping the market. We should be in the green given Turkey and China so far this morning. Anyway, then we've got Marco, RPI1. Hard to read, Marco. Anyway, Tesla has officially filled out pre-permits for their first public semi-charger station in San Antonio, according to this is his reporting. 8 semi-charging stalls are planned at the Flying J Travel Center, located right off Interstate 10 on the east side of the city. So there you go. Here it comes. The semis are coming. So I was looking through all the X stuff over the weekend. There wasn't a lot of conversation about Master Plan 4, so I decided, well, let's let Grok do the research. So this is a summary of the responses that Grok could find over the weekend. Tesla's Master Plan 4, released September 1, focuses on AI, autonomy, and robotics for sustainable abundance, Reactions are mixed with excitement over the visionary elimination of scarcity through tech innovation, cheaper energy, safer transport, humanoid robots freeing humans from freeing our time. However, critics decry vague AI promises, lack of originality, and deprioritizing EVs, calling it a smorgasbord of unfulfilled ideas. Fans and investors express disappointment, viewing it as an oversold promo without tangible milestones or new models, risking Tesla's auto OEM status by betting solely on unsolved autonomy. Market response includes stock volatility and snapped weekly gains. Overall enthusiasm coexists with skepticism on execution. So I thought that was a fair response. As you heard from last night, Nicholas Gibbs called it garbage, said he was very disappointed, thought it was corporate. It sounded like that had been written by Tim Cook. Other than that, he thought it was wonderful. So, yeah, of course, if you didn't watch my conversation with Nicholas Gibbs last night, you missed a great one. We went round and round. We had many, many battles, but I think that overall, the result of those battles would be good information, and I'll put that card up in a minute. Here's what the bears are saying this morning. You know, you got to pay attention to what the bears are saying about Tesla. And this is from the Times of London. Even Elon Musk has been forced to admit the investment case for Tesla is not what it used to be. The American electric car maker, which was an early mover in the mass EV market, is in a weird transition period. That was a quote. Its controversial chief executive, he told that to analysts as it unveiled the steepest drop in quarterly revenue in more than a decade in July. The transition has been forced onto the EV group by the end of U.S. tax incentives on electric cars, shifting tariffs, and regulatory uncertainty around self-driving cars, while demand has also faltered. Amid growing competition pressure, Musk is trying to reposition the $1 trillion group as an artificial intelligence and robotics company capable of dominating those nascent markets rather than a car manufacturer. This narrative seems to be gaining traction with investors. The shares are up, are almost 30% lower. Oh, yeah, this narrative seems to be all right. But then he says the shares are almost 30% lower than the December peak when the stock was riding high on hopes that Musk's role in President's Department of Government Efficiency could provide Tesla's boss with greater influence over. That's a very good analysis over the direction of autonomous driving. Wall Street analysts have been steadily lowering earnings forecasts for the company over the next 3 years, yet Tesla's enterprise value still stands at 71 times forecast earnings before interest, taxes, and other items. So there could be a sharper correction. The challenges of rising competition from both Chinese EV makers and traditional players and faltering demands are entrenched. It is also grappling with fears over brand damage in Europe and repercussions from Musk falling out with Trump since the Tesla chief quit his role in the Trump administration in May. No, it ended. He did not quit. He left because it ended. That was bad reporting. In the second quarter of this year, revenue fell 12% to $22.5 billion, missing by this much. It was the steepest fall off in a decade. The unique position of Tesla's technology that they once occupied in the car market is now better characterized as possibly better. No, it's significantly, substantially better, but that was according to Philippe Houchois, an analyst at Jefferies. I probably pronounced it really wrong. HOUCHOI. Houchois. I don't know how else you pronounce it. Musk warned of rough quarters ahead as the car maker braces for impact, but those rough quarters have been eliminated. Those rough quarters are not going to happen because we're doing great in Turkey, in Norway, in Spain, in China, as we just reported. In the United States, the numbers are going to be phenomenal. I think Tesla should be up this morning and to the right. Trump is also scrapping a program that penalized. Yeah, we know all about that. Let's go ahead. I think that's all that was good here. All right, let's go on to Yes, this is a very long article, and the rest of it you already know. All right, let's go here to, this is Randy Kirk. I would suggest that you hit the like button if you liked it. According to Brian White, you can also hit the hate button if you want to, because I get just as much credit for that as if you hit the like button, but I prefer likes. Okay, and then subscribe, notify. Later on today, we will have Larry Goldberg in the early hours on a Tuesday. I know that's a switch. We got Brian. Anyway, and then later, Brian White reporting from Kathmandu. And he's all done with Kathmandu. So it was a great conversation with Brian later tonight. All right. I have to change something here. Here we go. The Post highlights a significant increase in estimated price data for the U.S. All right. So I was watching this post that was talking about. It was a very long post talking about the reality that the CPI numbers, they're not as good as they used to be because they're not getting as much data. And so I asked Grok to just kind of summarize it because it was so long. This post highlights a significant increase in estimated price data. Estimated. This is an increase in the amount of estimated price data for the U.S. Consumer Price Index, jumping from a typical 10% estimated to 32. A third is estimated. This is a trend reported by Reuters poll showing 89% of 100 experts are concerned about declining U.S. economic data quality due to reduced survey participation and staff cuts. This shift may distort inflation measurements such as the CPI, PPI, etc. Historical context reveals the BLS has long used estimated prices for missing data, but the doubling since 2020 is crazy. They are just saying, well, we can't get this data in time or fast enough or whatever, and so they just plug it in. So the CPI data, not as good by a lot compared to what it used to be. U.S. manufacturing operation conditions improved, according to S&P, to the greatest degree in over 3 years during August, amid a surge in production and solid growth in new order books. Firms also Firms also took on more workers to a greater degree, and they did say though that their prices of their goods is rising. This was again linked to tariffs, which served to raise input costs steeply during August and in turn sharply drive up typical selling prices. The headline index from the report, seasonally adjusted S&P Global U.S. Manufacturing Index, was up to 53 from 49.8. On the demand side, new work placed at U.S. manufacturers rose for an 8th successive month, with growth improving noticeably since July. Indeed, Chris Williamson says this. Purchasing managers reported that the U.S. manufacturing was running hot over the summer. The past 3 months have been the strongest expansion of production since the first half of 22, when the upturn gathering pace in August and rising sales. Hiring also picked up. Everything good. The manufacturing sector is therefore on a course to provide a boost to the U.S. economy. The upturn is in part fueled by inventory building, with factories reporting a further jump in warehouse holdings. There was concerns, however, over rising prices and supply constraints. Cost increases are being passed on to customers via wholesale hikes in factory gate prices. Big question is the degree to which these price increases can be fed through. Despite survey respondents commenting on an uncertain business outlook, especially around tariffs, overall confidence about the future output improved since July. Demand, especially from domestic markets, was seen as picking up in the year ahead. Plans to invest in new plants and product lines were also noted by some manufacturers. Some positivity regarding future production, alongside a rise in recent sales, led to an increase in staffing levels. So that's all good. Then because this is a survey, you get another survey, same morning, ISM survey. I'm trying, and this is really a hard one to understand. So listen to the whole thing, not just the beginning, because the beginning is weird. And this is also about July, not August. So no, this is August. I'm sorry, it's August. Economic activity in the manufacturing sector contracted in August for the 6th consecutive month. Is this the same country? Following a 2-month expansion provided by 26 straight months of contraction. The manufacturing PMI report. The report was issued by Susan Spence. I think she's a DEI hire. The manufacturing PMI registered 48.7% in August, a 0.7% increase compared to the 48% recorded in July. The overall economy continued in expansion for the 84th month after 1 month of contraction in April. Does that sound like the same report? I don't understand it. A manufacturing PMI above 42.3 over a period of time generally indicates an expansion. And it's above that by a lot at 48.7. The new orders index indicated growth in August following a 6-month period of contraction. I mean, this is so confusing, I can't even figure it out. An August reading of the production index, 47.8, is 3.6 percentage points lower than July's figures. This is on production index. The prices index remained in expansion. Anyway, if you can figure out what that was, I mean, I read it to you exactly as they printed it. It was very, very confusing. All right, this is breaking news. Construction spending during July did contract by 0.1%. This is real numbers. The July figure was 2.8% below July of last year. Private construction was the main thing that was down. It was down 0.2%, but public construction was up 0.3%. So there you go. That I'm not going to read all of the details of that, but that's the rough result. All right. And we've got Trueflation, which does not insert their guesses. It's all 100% hard data. And Trueflation says we're sitting at 2.03% overnight, and we're looking at 1.95% year over year, and their PCE comparison is at 2.25%. All of that sounds to me like we should be doing hurrahs and dances around the campfire. We've got the POTUS sitting at 48% this morning in terms of his desirability as president, likability, whatever it is, however they're judging that. But it's good news. But the VIX this morning says, never mind, wait. Actually, it was way up and now it's coming back down again, but it's up 12%, 18.1 this morning on the VIX. So showing a little bit of concern, probably mostly over those tariffs. All right, let's go ahead and look at, you know what I'm talking about, the tariff thing. The judges on Friday saying, not so fast, Mr. Trump, you may not be able to do these tariffs. I've already explained to you last night on my program. I said, I believe that the Supreme Court will vote on this 5-4 in Trump's favor when the time comes for them to decide. All right, so everything was down horribly this morning, but as I mentioned, they are bouncing back up. The Dow, which was down over 1%, is now down 0.63. The NASDAQ is down 0.94, and it was down a lot more. And the S&P, which was also down more than 1%, is down 0.85. Now listen to this. Tesla is only down 0.6. So even outperforming the market in general, not just on a beta, not just the difference in its normal spread. I never remember whether that's beta or delta. I think it's delta. I always get it backwards. Do you have those kind of things, or is that an age thing? Things where there's two possibilities. Never mind. Okay, let's go ahead. We've got the Magnificent Seven all down, every single one. No, I'm sorry. Microsoft is down less than Tesla, only down 0.3. All the rest are down more than Tesla, including NVIDIA down 2.12. So what does that tell you? That tells me that Tesla right now is the darling of the Magnificent Seven with Microsoft. We've got the Cathie Woods mix this morning because why? Okay, because who knows? But the bonds are recovering also. We've got the bonds down, I'm sorry, the bonds up 3.7 basis points, but they were up 7 basis points. So we're back to 4.263, which is not the direction I would like to see it go, but I'm glad that at least this morning it's recovering. We've got oil, Brent, I'm sorry, we got $64.89. So that's up this morning, up 88 cents. We have got natural gas is down 3% to 2.90. So this is, it's been swinging around, but the swings right now have been around $3 down to even as much as 250, 260. Gold this morning, you can't hold it down. I'm making a call out over at 𝐑𝐚𝐬𝐝. This is it. Time to sell. Not investment advice, but Larry said we should have been selling a couple $100 ago. I'm saying, okay, it's overdone now. There's no more room for gold to go up. We're at 3,565. It's up 1.4% this morning. Silver up 1.69 at $40.88, a full dollar and change above its previous all-time high. Copper now sitting right around where it's been, $4.53. It's down a little bit this morning, but it's actually up a little bit compared to its current kind of very tight range. We've got the dollar mix this morning. Overall, the dollar is down a little, I think, in general. And Bitcoin finally recovering this morning, up 2,216 at 111,472. And that is the list of all of the things. Treasury yields, according to the headline, Treasury yields are jumping this morning on the prospect of the United States having to refund tariff money. I think the chances of that happening are extremely low, and that's why I think you're seeing the market come back this morning. I think they all listened to my report last night saying that the Supreme Court will decide 5-4 in Trump's favor, and I'm suspecting that this will be held soon. It may take them a week or so to decide, but I think this is going to be one of those really quick ones. All right. Later on today, Larry Goldberg and then Brian White. And last night, of course, Nicholas Gibbs. I will put the card right here for you to go back and listen to that. Hour and 10 minutes of absolute. We got into it. I mean, it was fun. And I think you'll find it useful. And maybe you'll agree with me. If you agree with me, be sure to let me know that you agreed with me because, well, we disagreed on a lot of stuff, but we agreed on some stuff too. But anyway, there's the card. Go back and check it out. I think that's all I've got for you this morning. Oh, you want me to just one more check? Okay. I'll just go back one more time here and look at Tesla. And Tesla is now only down 0.56%. I'm thinking could make green today. We'll see. It's been great talking to you.